Good morning. I'm excited to share this talk with you guys here this morning, this afternoon. Before I start, a couple things on this screen. On the left, you've got the QR. As Mitch said, if you can follow me on LinkedIn, that'd be great. I'm trying to build a really curated audience on LinkedIn that's highly mortgage focused and even more so very loan officer centric. So give me a follow on LinkedIn. I try to put out content that's helpful, useful, not salesy, if you know what I mean. And then also on the right, there's a QR code. I'm going to make mention a few times today. I talked a little bit about it already, about this product called Key Steps, which is our FinLocker financial fitness and home ownership app. The QR code on there, if you get a chance, just lets you learn a little bit more about the product. You could set up a demo with our team from that QR code. And there's a couple times during this talk today that we'll dive into some aspects of how technology can help you in your efforts to engage and nurture consumers. Before I get into the slideshow real quick, I am the proud co-author of Rethink Everything You Know About Being a Next Gen Loan Officer. And it's not a coincidence that today I'm going to talk to you about what I think loan officers need to do in 2025 and beyond to become and be and maintain relevance as a modern mortgage loan officer. And a lot of what I will talk about today is what I learned in reading this book, the Green Book, as it's now affectionately known. 37 people in the industry, 37 selfless people in the industry contributed their expertise, their time, their energy to write a chapter for this book. Kyle Draper and myself were lucky enough to be able to put our names on the front as co-authors. But at the end of the day, we didn't really write a whole lot in the book. It was these 37 people that, again, their expertise that came shining through. And so if you want to learn more about what I'm talking about today and you haven't yet picked up this book, it's a great read. I think it's on Amazon for like $15 right now. And if you buy it and you get it delivered and you read it and you say you got nothing out of it, just send me an email and I'll Venmo back the $15 because I'm convinced you'll find at least $15 of value in the book. But let's get rolling, guys. So what we're going to talk about is reality, right? So the reality of it is, for the most part, the refinance business is kind of gone. We had a little dip last year. I think we all got excited about it. You guys saw a spike in refis and started thinking, all right, maybe the floodgates are opening again. And then just as fast as the rates dropped and the apps started coming in, rates went the other way. They spiked up, the refis disappeared almost as fast as they came in. And so really what I want to talk to you guys about today, which is what I'm calling the hard truth, that your refinance pipeline is not going to save you. And there's a bunch of reasons for that. One is none of us can control the market. We can't control rates. But the other thing that y'all need to think about in terms of the refinance pipeline, if you will, or opportunity, is that just like you might be thinking it's going to be a part of your business model, rest assured that every lender, every servicer that has acquired mortgage servicing over the last 3-4 years, they've been acquiring it for a reason. And the reason is they're going to be in the best position to execute and move on refinances. And so what I want to talk to you about is getting off the roller coaster, of record low rates, a refi boom, and then this historic slowdown. Right now we're all waiting. We're watching the Fed. We're every day checking rate movements daily, hoping for this window of opportunity. But I think we have to stop and ask ourselves, is that really a strategy? And the way I think about this, if your business is dependent on unpredictable rate movements, you're not in control at all. The real opportunity is the one that will make or break loan officers in 2025. And it's not chasing the next refi wave. It's focusing on future home buyers. So that's what we're going to talk about today. We're going to talk about how to reach early journey first-time home buyers before your competition does. We're going to talk about how to educate them in a way that builds trust and positions you as their go-to expert. We're going to talk about how to engage them long before they're mortgage ready. You're going to hear me talk a lot about this concept of early journey, up funnel, first-time home buyers. These are people in my mind that are 6, 12, 18 plus months out, sometimes longer. We're also going to talk about how to nurture this cohort so that when they're ready, they come straight to you. And this isn't theory. This isn't guesswork. I already kind of talked about this when Mitch was on the screen. This is the strategy that top performing loan officers are using today. And I've talked to a bunch of them about this in various ways. So what's the issue? What's the problem? The problem is the mortgage industry is playing the wrong game. And most loan officers are part of the problem in how they operate. We focus on transactions over relationships. We rely too much on realtors to send us business instead of building our own pipeline. We chase deals at the last minute instead of cultivating future home buyers. There's going to be 2 references I make in this talk today on studies that I'm going to pull some information from. If you want access to those studies, shoot me an email, brian.vieaux, brian.vieaux, Vieaux, at finlocker.com, or shoot me a direct message on LinkedIn, and I'll email you back both of these studies. The first one is a study that came out in I think it was December of 2024. Boston Consulting Group, which is a large entity that just looks at all things financial services, put out a very specific white paper around the state of the U.S. mortgage industry with some predictions and other really cool insights. I'm only going to pull out a few pieces of information that I think are relevant. So what Boston Consulting Group put out in their paper proves what many of us already know, which is the purchase market is the backbone of a sustainable mortgage business for a lender and more specifically for a loan officer. And so on the screen, you see here what BCG put out plainly. They said purchase originations are demographically driven, less rate dependent, and less volatile than refinance volumes. Not too surprising. And so how I translated that was for a loan officer, if you're not focused on first-time home buyers, you're setting yourself up for failure. There's no shortage of demand. We know that. We know there is this pent-up bubble of otherwise of-age consumers who would be buying homes, but they're kind of frozen out of the market for a bunch of different reasons. There's 8.8 million mortgages in the United States that have rates over 6%, yet many of the homeowners that have those mortgages aren't moving. We know that home affordability is the biggest barrier for new home buyers, and it's not lack of desire. It's not lack of wanting to own a home. It's affordability. And then lastly, Generation Z is the most financially anxious generation ever, but they want to buy homes. And so when you combine those 3 things, it really speaks to what we're going to get into here in this talk. So the real challenge, what is the real challenge? Most first-time home buyers aren't ready. Their credit isn't where it needs to be. They don't have a down payment saved, and they don't know where to start. This is the biggest one. They don't know where to start. So they delay their process. And that's why we have the average age of a first-time home buyer as we left 2024 creeping up into the 38, 39 range, because people just keep putting off this process because they're unsure, they're uncertain, they need help, they need somebody to come in and help be their hero as it relates to getting them to a place where they're emotionally and financially ready to take on buying that first home. So if you're a traditional loan officer, when someone comes in that looks like it has those attributes that are at the top of the screen, credit's not ready, no, they don't have enough down payment, they don't know where to start. The traditional loan officer says, come back when you're ready. A modern loan officer, and hopefully everybody that's on this, spending the 2 days on Mitch's platform today, hopefully all of you are identifying as a modern loan officer. The modern loan officer says, let me help you get there, even if it takes 6, 12, 18, or 36 months. So the modern loan officer, I'll also reference the modern loan officer as a next gen loan officer. They don't wait. They educate, engage, and nurture these first-time home buyers, these prospective first-time home buyers, until they are ready. So what does this mean? It's a shift. In my mind, it's really a shift from being a transactional-based loan officer to a relationship-based home ownership advisor. So let's talk about what's really working right now for these home ownership advisors. The best loan officers aren't just waiting for business to come to them, right, through referrals from realtors. They're building a repeatable system for attracting, engaging, and nurturing future home buyers. How are they doing that? They're leveraging social media and their own personal brand to generate their own leads. That's so important. I came into Paige's talk a little bit late, but I heard her talking a lot about the value and power in personal branding. Look at the people there's only a couple brands as it relates to mortgage companies in our industry that really, provide trust, if you will, or even awareness to consumers. And I don't think there's a lot of people on this call today that are working for those brands. The real reality is it's each of you, it's your personal brand that a consumer builds trust with. It's you, the person, not the company you work for. And I'm not knocking any companies, it's just reality. So in addition to social media and personal branding as a strategy to generate own leads, these modern loan officers, these homeownership advisors are embedding themselves in their local communities, becoming the trusted resource, the best trusted resource for all things financial fitness, financial literacy, financial education for home buying. And now the last thing on this topic is knowing that we're really serving this younger cohort, right? This next generation home buyer. These homeownership advisors are leveraging tech-enabled tools that help guide early journey buyers from and through the financial preparation phase, which also, I talk about this a lot. It's not just financial preparation, it's emotional preparation that these consumers go through. The financial preparation leads to confidence, which reduces anxiety, which then gives them this emotional readiness. And so the homeownership advisor, the modern loan officer that leverages tech to guide early journey buyers from financial preparation to mortgage readiness, they're winning. They're winning the game. This is what I call the hybrid loan officer approach. I will never tell anybody that, calling on and working with realtors and getting referrals from realtors is a bad strategy. I think it'll always be part of the game. I do believe, though, that the game is shifting. And if you're 80% reliant on realtors today and you don't have a strategy to flip that from 80% reliant to maybe 60, 50, 40, or even 20% reliant, you will get phased out. The business will pass you by because there are loan officers out there that are truly a hybrid loan officer where they're making sure that a significant part of their pipeline is coming in because of their personal brand, not because they're reliant on someone to refer people to them. The LOs that are winning in the market are the ones who are taking control of the top of the funnel. What that means is they're meeting prospective home buyers where they are, on social media, in financial literacy events, in home buying webinars, in the community. And so it's showing up where these prospective home buyers are, where these younger prospective first-time home buyers are. And showing up is the key. That means providing tools that help these prospective younger home buyers track their savings, improve their credit, and get mortgage ready months before they're even ready to apply. That means staying connected, sending personalized content, helping them understand home affordability, and guiding them through the process. So when the time comes, they're not out there searching online for a lender. They already know who they're calling because you've been with them for 6, 12, 18 plus months, building trust, building a relationship that's anchored on being that trusted financial advisor, that home ownership advisor. So what's the framework? I spend a lot of time on this concept with our FinLocker product. in reality, let's look at it from point by point. So I'm going to talk about this framework of winning using reach, education, engagement, and nurturing, right? So let's start with reach. And I think, everyone that's on this webinar today, I think is already either already has some of these answers or is already seeking these answers. I mean, I see Carlos in the audience, and I know this guy has mastered the YouTube platform, right? And so that's one of the things that we talk about in terms of how do you show up? How do you get in front of these early journey first-time home buyers? You have to master social media. And I believe it's the combination of mastering the social media aspect, but also local engagement. One thing that you all have as an advantage over some of the biggest brands that are, kind of online lender only, is you are hyper local. You are in your community. And I say in the community, meaning your physical community, but also your digital community. So what are some of the things that I'm seeing modern loan officers do to own their brand? They create weekly educational content. If you're not following Carlos, I advise you to do that. His YouTube channel, as I mentioned, is fire. It's awesome. So this weekly education content, videos, posts on credit, down payment, savings, mortgage readiness, tips. These could be short videos that lead to a long form piece of content. Community spotlights, right? Using your digital brand, your presence to spotlight and feature local businesses and home buying success stories to deepen your local ties. So we all have these wins. And one of the things that drives me bananas is seeing the same tired social media post that says 7-day clear to close. Who cares? Nobody cares. Tell the story instead of just, instead of being lazy and just taking that 7-day close content and putting it out there. Tell the story of who the person was and why a 7-day clear to close was helpful. Those are the things that are going to differentiate you and build a brand, help build your brand. Use hyperlocal Facebook groups, next door forums. Be active on those forums, answering questions, offering guidance. But guys, you can't sell. Don't sell in those platforms. Be a giver. Be a giver. You'll get your share back. So be that resource on those platforms that's answering the questions, engaging, helping people better understand their situation. And then, when you're on social, using the localized hashtags and your TikTok content. So hashtag living in Novi, Michigan, hashtag home buying, Southfield, Michigan. That's going to help you dominate searchability. Again, going to call out or shout out Carlos. I think he's really doing a great job with his content there. The next piece of it is educate. So if we built the reach, now what? We need to leverage that reach by educating. And so use tools that help build trust and long-term engagement. We already said this, but your buyers aren't ready today. They need help. The good news is you can help them get there. So offer financial fitness tools like FinLocker, like KeyStep. So those tools provide credit tracking, savings goals, mortgage readiness assessments. Teach financial literacy, host free webinars, post weekly mortgage myth busting content, things like that. Week before last, Cole Brantley did a webinar on I think he advertised it on Facebook, did the webinar, had 200 plus people RSVP for his home buying webinar. 80 people showed up for his webinar, which was awesome, by the way. He worked with Luke Shankula on the lead gen strategy to get people to that webinar. And then while he was doing his webinar, he used a version of our FinLocker tech, our KeySteps app, as a way to engage the audience and get them deeper into his funnel. And I think we had over 20 downloads of the app during his webinar. So now he's got people that were in his webinar that now extend their engagement with Cole through this mobile app experience. Lastly, partner, co-brand your content with realtors, local professionals, build your expertise beyond just mortgages. So why do we do this? What's it going to do for us? JD Power puts out a couple annual surveys for the mortgage industry. One that was released, I think it was in December as well. Again, this is another study that I'm happy to share with you. Just email me or DM me, and I'll send you the study. But what JD Power did in their last mortgage origination studies, they learned that trust scores are 133 points higher when borrowers rely on their lender's expertise. Early lender engagement increases borrower retention by 54%. So if you're not consistently educating, you're losing customers before they even think about applying. And that 54% retention was really at the first engagement that a consumer home buyer had with a lender loan officer through closing, right? So early lender engagement increased borrower retention by 54%. A couple other points on here. Borrowers who connected earlier with their lender in the process were less likely, 20% less likely to shop other lenders. Overall customer satisfaction, as measured by JD Power, was 107 points lower if the first time the consumer engaged with a loan officer was at the time of loan application. In other words, that if they were referred to a loan officer by a realtor at the point of sale, not the point of thought, overall satisfaction was 107 points lower. So again, if you're not consistently educating, you're losing before your borrowers even think about applying. So how do we engage? The top performing loan officers are not reactive. They have systems in place. They use virtual assistants for content scheduling, post repurposing, social media, community management. They automate their social media and CRM follow-ups. They create lead funnels and landing pages, leverage customer reviews and testimonials, right? That social proof, that social selling. The goal is always to stay top of mind without having to manually follow up on every lead. And I know there's other content presenters here over the 2 days that are covering some of those things. And lastly, these modern loan officers own the nurture, which means they own the relationship all the way until the time when that consumer is ready to buy. And I'm going to say it again, 6, 12, 18 plus months up the funnel by hosting those home buyer events, virtual and in person, positioning themselves as the go-to expert, providing personalized mortgage readiness coaching, reaching out when the credit or the savings improve on their customer. This is an example where the Key Steps FinLocker app signals you as the loan officer that one of your prospective home buyers just had a credit increase, or they're this much closer to saving for their down payment. So that's the opportunity for you to proactively reach out, personalize that readiness coaching, and finally convert your nurtured leads into advocates, right? Happy customers, happy buyers are going to send referrals when they feel supported. So long-term engagement will equal a higher amount of inbound leads. And this isn't theory. This works. This is tested. I talk to loan officers all the time. These loan officers are not just chasing transactions. They're building relationships long before a borrower is mortgage ready. So let's go back to our JD Power study a little bit and go a little bit behind some of the numbers. So again, in the 2024 mortgage origination satisfaction study, JD Powers proved what we've known all along, and that is that loan officers who engage home buyers early at the point of thought win more business. They see higher customer satisfaction and ultimately earn greater loyalty. 43% of borrowers initiate contact with a lender when they're just considering home ownership. Let's say that again. 43% of borrowers from the 2024 study initiated contact with a lender when they were just considering home ownership. This is the point of thought. Those lenders and loan officers who built this early bond were 20% less likely to have that borrower contact another lender, and 54% less likely to have that borrower submit multiple applications. That's huge. The likelihood of that borrower recommending their lender to somebody in their sphere of influence jumped to 69%, which was a 5% increase from the 2023 JD Power study. So what does this mean? If you are waiting for borrowers to come to you at the application stage, point of sale, you're already too late. In fact, JD Power found that customer satisfaction is 107 points lower when a lender gets involved only when the borrower is ready to apply. We talked about that a few slides ago. But when you engage early in the journey, before they even start shopping, satisfaction jumps 41 points. This is not just about winning deals. It's about earning loyalty, creating raving fans, and turning your business into a referral engine. Here's the kicker. The trust scores among borrowers who relied on their lender's expertise was 133 points higher than those who didn't. This is why being an advisor and not just a loan officer matters. This is why I keep saying, stop waiting for realtors to send you leads. Stop waiting for home buyers to show up at the point of sale. The most successful LOs aren't just taking applications. They're educating home buyers on credit, budgeting, and down payment strategies. They're providing tools and guidance to help get them mortgage ready over time. They're building relationships so deep that when the buyer is ready, there's no question who they're going to. And that is how you future-proof your business. So the big shift that we need to make. So here it is, the old way, waiting for realtor referrals, competing for borrowers only at the point of sale, at the application stage, chasing deals instead of building your brand. The new way, generating your own leads through personal branding and social media, engaging buyers sometimes years before they're ready to transact, using tech tools to nurture relationships at scale. The loan officers who embrace this model now will own the next decade. I'm convinced of it. The ones who cling to the old tactics are going to struggle every time the market shifts. So we have to ask ourselves, are we in control or are we just waiting? If you're waiting for rates to drop, hoping realtors send you business, watching the industry shift and doing nothing about it, you're not taking control, right? On the flip side, are you building your own pipeline of future home buyers? Are you educating, engaging, and nurturing them now so that they come to you when they're ready? Let me say that again. Are you educating, engaging, and nurturing them now so they come to you when they're ready? And when they're ready might not be for 6, 12, 18 months. I'll say that again. I can tell you right now, the loan officers who embrace will dominate in the years ahead. The ones who don't, they're going to be scrambling when the next rate shift doesn't go their way. The choice is yours. Who's ready to play the long game? So I'm going to leave you with a couple things here, guys. On the screen, I've got some information on the Key Steps app. You can scan the QR, learn more about how the tool is helping loan officers today. We've set this up in a way that loan officers can come on board for as little as $115 a month. That's our annual subscription. Otherwise, you can come on for $175 a month, which is our month-to-month. Unlimited consumers, unlimited realtors. You'll be set up in basically in 48 hours, ready to use it. We have a full library of education content for you to learn and understand how to best use it. But we've also created marketing content, so social media content, email scripts, text scripts, first-time homebuyer curriculums tied to the various components of the app. We're here to help you win, guys. I want to see loan officers, local loan officers, dominate the purchase business, not just for 2025, but for years and decades to come. So I appreciate everybody's time today. Mitch, thanks so much for having me on.